Hello, and a massive hello to everybody. How's everybody doing? Hope everybody's having a great weekend wherever you may be, whatever you may be doing. This is 50 Pips rocking and rolling here on the 26th of November, 2017. So no trade calls and recommendations. Every response for their own stuff. We're here for educational purpose only. So as we go into this, the last 4 trading days of November, we'll have to see what we get. Fairly quiet news on the news front, except for, of course, the OPEC meeting on the 29th, 30th, and again, not huge amount of data flow on the news front as we get ready for the week after, where we have some central banks back on deck and key U.S. data. So what's going on here? So first things first, a lot of people asking about crude here. As we said, there's very little reason for this to bar a tape bomb, not to try to continue to press higher all the way into the OPEC meeting. So if we see the usual kind of scenario, you'd expect this to continue to try and take out stops, continue trying to rip higher. And then if it's, buy the rumor, sell the news, then we'll get a nice little puke, tradable puke. Clearly, as long as we hold above this 200 here on the weekly, and especially if we get daily closes, weekly closes above the 60, then 65 is the level everybody's going to be looking at. 65 is the level that attracts, and this is most likely where the most damage can be done to the shorts. On the downside, I think this whole ramp, as we've seen in the past, they could easily let go when it's buy the rumor, sell the news kind of fact. So do not be, you can't be surprised to see this, even if we end the week all the way back down, close to those 50s. The key pivotal level is still the 55 mark. So we're going to keep things as simple as possible. 60, 55, 50. This is pretty much the range we're stuck in, right? And the pain trade is possibly this kind of break, but we would not be surprised to see it trading but still inside this range at the end of the week. It's a tricky one to call. On the equity side, we've seen a little bit of wobbly stuff out of China. DAX not looking too healthy, but really, in terms of the US side, even though, Russell could be interesting this week, it's in grind higher mode. Now, it's a little bit difficult to read too much into, the last days in a holiday week, Thanksgiving. We'll have to see what happens. But so here, depending on what you're focused on, I still think that 2600 remains pivotal. I would not be interested too much in looking at the shorter term action. What happened last week, even the weekly close, not so interesting. What's going to be interesting is how we open this week, right? Once the flows and once the volumes come back in. Clearly, as long as we hold above the 2600, then the squeeze is in play and there's very little reason for this to sell off. If we start to trade lower, it's going to be hard for the bears to do a lot of damage, because now, unless we start to trade back below all these dips, into the 2550s, back below the 50 DMA, right? Chances are this is just going to continue. Any dip is going to get bought. So base case here is pivotal around the 2600. This is a bull bear line. We feel this is a very tradable bull bear line, either for more Momo to the upside or a bigger or a little bit of a correction. To see anything meaningful, we'd have to see a daily close below the 50 DMA, right? Still think that it'll be very healthy to see us pull back all the way into the 200, but for now, just look at action around that 2600. What we talked about last week, we said it's really all about the DXY, right, and the dollar. And here, as we said, it was extremely important for the dollar to hold above this 100 and the 50 DMA to continue to try the rotation higher, because if that let go, then it opened up the door for a move back into the 9190s, 92s, and that's what we're seeing. So right here, you see we pretty much went kind of knife through butter here, not really holding. Close below, it's tricky. We'll have to see what the volume does coming into the week, but right now, the way we look at it is... actually, let's draw something in here. So essentially, you have that low, and what you want to see is, as long as we get back above from a daily close, you would not be surprised to see this try and come back into this 50 and the 100 DMA, which is now going to be resistance. But as long as we hold below, then path of least resistance doesn't change. At least short term is we still maintain our call on the break below here for a move back to the 91.90s. And if that goes, it'll be very tempting to come out and print new lows back through the 90s, much lower. So that's pretty much, it's in play, and you see that playing out on euro and on yen, as we discussed, especially if this goes, a lot more damage can be done here. And what does that look like on the euro? Well, basically, this is the move, right? If you remember on the daily, we talked about a lot of wheeling and dealing here, and we said the asymmetric risk reward, as soon as we popped back above here, was to get long with stops below these lows, because we're still stuck in this shaded chop line. And if you look at it on the weekly, it's extremely clear, right? We come back below key level, we break above the 200 on the weekly, we come back below, sloppy hold, close below, right? At that point, when we're back closing below the 200, that's where everybody said it's a done deal. It's finished. We're back to die, euro, die. And we said, well, not so quick. Look at the candle after that. Very bearish close again. And then, bam, there you got your kicker. After, oops, not what I wanted to do. Let's see if I can get rid of this. Okay, here we go. After this close, then you get this back above the 200 DMA. This is not the sign of something that's going to die, right? You don't know what's going to happen. As always, it can go up, down, or sideways. But that close is not the sign of something you want to start putting on fresh shorts. So right here, our base case was still, we're stuck inside that shaded area. Long stops below those lows, looking for us to still stay inside that zone. So again, especially if the dollar breaks down, you can look at this as that bottom side of the dollar. That just opens up the bigger move we've been looking at here from a swing perspective, right? Back above, either we correct back down and move in a very healthy fashion, or we hold this move in extensions as long as we hold the 200. So as long as this holds, this is potentially what's open up, back 26, 126s. And if you look at it on the yen, again, we were looking for that fail to hold above 114.50s to give us a move back into neutral territory, which we call 112. And that's pretty much where we are. So now, especially if we continue to hold below that 112, then, don't be surprised to see this come back down into the 109.50s and potentially lower. This is going to be the big test, especially also if we get a little bit of a correction on equities. This is what you want to look at going into this week, right? Is gold going to start to catch a bid again, and is yen going to stay heavy? As long as yen stays heavy and you see that gold catching a bid and all that DXY moving in synergy across the board on all the charts, then it'll lay a little bit more weight to the scenario where we see equities correct. But again, this daily close above the 112 bull bear line, big key tell across the board. And as we talked about gold, where's the GC chart? Again, no change to our outlook here. We said this could get very choppy, but our base case was still that we are basing around these lows for a retest higher as equities ultimately start to correct, will start to correct again. And again, here we are, we're back above all these moving averages, still very sloppy trying to hold. We really don't care what happens inside this range. We call it velocity of move inside range, as long as we don't close below the 200 from a day close perspective. For us, this is still a choppy basing process, and we expect this to hold, try and close back above the 113, and ultimately make its way back to 1300 and back to the 1350s and possibly higher, depending on what happens across the board. So again, I think pretty much everything is starting to move a little bit in sync. The last thing, some people wrote in asking, yeah, there are a lot of interesting single stock names out there. But the other thing is ZBs. So no big change to the ZBs here, but as we said, there's one chop zone here, and then if you flip over on the weekly, then you've got this bigger chop zone. But the basing action here around the 152s, as long as that holds, it looks like it wants to try and attempt a rotation back to that top end, back into the 100, possibly back into the 159s. And unfortunately, we're not going to change our call here in terms of all the people writing in asking, so what's the next big move on bonds? It's hard to say. For us, it's going to be very difficult to call unless we get daily, weekly closes below the 152 or above the 159, or at least to start to see some sign of life outside of this 100 and this 200 weekly. It's just very, very choppy. Market's still trying to decipher what's going to come out of the Fed. We'll have to wait. It's just one of those waiting games, okay? So I hope that was useful, guys. Thank you so much for sharing. Thank you so much for liking. I hope everybody's had a good chance to get rested over this long weekend. You know, whether you are in the U.S. or not, always worth celebrating Thanksgiving and resting and getting ready for the last stretch of the year. Have an awesome one. Thank you so much, guys. Bye-bye.